Well, good afternoon, everyone, and hope you had a great trading day. Welcome to TradeStation. My name is Don Prattle, and I have a great presentation on tap for you today here at TradeStation. We have enlisted our friend Bennett McDowell from all of the morning market briefings that you have come to enjoy on Wednesday afternoons or Wednesday mornings, depending on your time zone. He's going to talk to us today about how to plan for success every single week. Established in 1998, TradersCoach.com is designed to provide you with expert support in your trading and investing and to help you achieve your own financial goals. Bennett McDowell's vision when he first began his journey was to create a site that provided quality education to all traders and all investors in all markets and in all time frames. And for more than 35 years, TradeStation has been the online brokerage choice for advanced traders seeking comprehensive investment options and futures. Traders actively engaged in stock options and futures trading can rely on TradeStation to meet that needs. Today's presentation is another step towards doing that, and we're very happy to provide that with you for you today. Now, our presentation here today is for educational purposes only. All the symbols, all the trading ideas, and everything that we discuss are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Remember that active trading may not be suitable for you because it's not suitable for everyone, and options trading itself carries a higher degree of risk and may not be suitable for all traders. Options may not be the subject of this presentation, but we like to pass along the disclosure information nonetheless. I've included in the chat panel some important pieces of disclosure information, especially the characteristics and risks of standardized options and the other asset classes that we cover here at TradeStation. Now, I'm Don Prattle from TradeStation. If I didn't introduce myself before, I'm the Director of Trader Development and Education here, and that handsome fellow in the chat panel is Mr. Bennett McDowell of TradersCoach.com. Now, if you are a TradeStation customer and would like to master the TradeStation tools, or if you're not a TradeStation customer but would like to be, I want to invite you to come to Plantation, Florida, January 28th through February 1st. Yes, 5 full days so that you can master the TradeStation platform in just 1 week. The session includes a deep dive on the trading platform, some strategy development and strategy testing, easy language, fast-track programming. Throughout the course of the week, we'll offer comprehensive speakers from various trading, various asset classes, and also we will feed you very well. Our previous attendees have loved the ambiance of our Plantation headquarters, and so I'd like to welcome all of you to register. Find that you can go to that tradestation.com/masterclass, and you'll find that registration link so that you can participate in the TradeStation Masterclass. So, without further ado, let me bring over Mr. Bennett McDowell and his presentation today, how to plan for success every week.
Okay, Don, thank you so much. Welcome, everybody. Let me just make sure we got all the technology working. You should be able to see me on cam, and you should be able to hear me okay. Those are two very important things. This is the year of the cam, so we're starting to use that more. All right, so far, so it looks good. Okay, excellent. Well, we're going to have a lot of fun today. We're going to talk about what I think you really should be doing each and every week to prepare for your trading week. And we get a lot of questions. I do a lot of coaching here at TradersCoach.com, and we get a lot of questions on how to get ready for the upcoming week. So we're going to discuss that. We're going to show you how we scan the market using TradeStation's radar screen. Really cool scanner. How many people out there are using that? Let me just ask, and let's see how many people are actually using radar screen right now. Because if you're not, you really should. And hopefully by the end of this session, you'll see me using it a little bit, and that's going to encourage you to start using it as well. It is a tremendous scanner, and it has a lot of flexibility to scan the way in which fits your style of trading. So we're going to talk about that. All right, so let's get going here. All right, so first thing we want to do, Don covered all the presentation disclaimers, so I really don't need to say that. But I would like to invite you to our website, at traderscoach.com. We've got a lot of free material there. Stop over, check us out, read about what we're all about. You can look at our software tools, our educational courses. We have a lot of online courses there as well. So come by, say hello. You can send us an email as well. I've also written 4 books that are available at all major bookstores. I think one of the most popular places is Amazon. Everybody loves to read the reviews there. I know I do. But you can check those out. We have everything from risk control on how to use our software tools to how to run your trading right from your home like a professional hedge fund, and Elliott Wave as well. So definitely check those out if you're interested in any of those topics. All right, so the idea here as traders is what? We want to make money, right? And we want to hit that bullseye each and every week at the beginning of the week. But you have to be prepared to do that. So that's what we're going to talk to you about, is how to get prepared over the weekend so you can be ready to go on Monday. So how many out there are interested in that? How would you like to start each week with a game plan, and I underline game plan, and a list of high probability trades? You know, you should be working on watch lists and things like that. Okay, heck yeah, right? Everybody's saying, yeah, of course. All right, so no-brainer question, but it's important to really look and break, I think, up each and every week, because there's so much market information coming in that you really want to prepare yourself for all the upcoming information into the market for each week. So that's important. All right, next question. Would you like to know what the market probabilities are each week at the beginning of each week? In other words, you know, is the market going to make a new high? Is the stock or futures or Forex that I'm in right now, what's the probabilities of that trend continuing that I got into? And I think, you know, obviously the answer to this is going to be yes as well. But the idea is I want you to start thinking about not really making trading a game of just throwing dots, but a game of preparation. That's really the key here. So I got 2 action steps to get you there. So let's talk a little bit about those. Action number 1. First thing you want to do is find the best trading markets and sectors and create what I call watch lists. How many people out there know what a watch list is? When I say the word watch list, what does that mean to you? Okay, right. It means a list in which you've searched for stocks and maybe they're not quite ready to go into a trade yet, but they could be and they're worth watching. So that's what the word watch list comes from, right? All right, so you want to develop that. So how do you develop that is the next question. And it can be a lot of trouble. I understand that. Creating a watch list can be a little confusing. So you don't want to overcomplicate it. So what you want to try to do is develop a plan of action each and every week. And I do it over the weekends. I scan for, basically I build my watch list on Sundays. And I do my scans again every Sunday. Now, if you're day trading, that's a little bit different ball game. But I'm talking about more position trading here, or even shorter term trading, like using maybe a 60-minute chart and trading for a few days, okay? All right, so let's talk about that. All right, first thing is, as traders, all right, we're really more concerned with the momentum of the market we're about to go into versus how it looks from an investment standpoint. Do you agree with that? So we're really kind of as speculators or traders in the shorter term environments, we're really trading the momentum of the market, okay? So right away, when you create a watch list based off that type of mindset, you want to focus more on momentum and not long-term investment analysis. That's step 1, all right? Now, more traders in a particular market equals more liquidity, which can, if the momentum is going in your direction, mean faster results. So you want to move in markets that are in play. Okay, you don't want to get into sideways markets. Now, sideways markets can be great markets to put on your watch list because we all know big trends come from markets that are channeling, but we don't know how long they're going to remain channeling. And so we put those on a watch list. We put support and resistance lines above and below the channel. And when it breaks out, all right, then we start to take a look and see what kind of momentum was involved in the breakout and if there's some opportunities there for a new trend. So just because a market is dormant and channeling doesn't mean that you have to just forget about it, but maybe that's one that you should put on your watch list. So we look for those. We look for channeling markets. But then we also want to be where the money is, and that's during the breakout. So if it's breaking out, what does that mean? It means that some particular type of information came into the market that wasn't there during the channel that caused the market to move, whether up or down. You can take a short trade as well as a long trade, but there's got to be some information that caused it to break out of that bracket, and that can create momentum. So that's an excellent scan as well, and you can do those, okay, in Radar Screen. All right, let me just see if there's any couple questions coming in here. Yeah, you can ask questions at any time. All right, Alex, ask your questions. I'll get to them eventually, okay? All right, so another thing we like to look at is global trends, emerging sectors, and you can scan sectors too, You can use Radar Screen to scan the momentum in the sectors. When I say global trends, don't bury your head in the sand and just pay attention to technicals. Look and see what's out there, okay, in the world, so to speak. Is oil in play? Is something going on in the Middle East? Is there a war about to go on? Is that going to affect oil? Is that going to affect defense stocks? So you want to kind of pay attention to that. You don't want to just jump into the market. You want to certainly analyze the market using your technical indicators, but we also want to keep our ears open and listen to what the world is telling us. Okay, so I think that's really important. Okay, analyst upgrades and downgrades, we can check those. Those can be a source to see if there's any meat behind or momentum behind the upgrades and downgrades. Okay, so things like that. Scanning for market cycles. If you're into Elliott Wave, are you in a wave 3, which is a robust, optimistic cycle of the market, or are you in a correction? Okay, that kind of thing. So all that can be looked at, and that's the first thing you want to do to try when you build your watch list is to kind of incorporate all those items. All right, action number 2. Once you find something you like and it's breaking out or about to break out, all right, the next thing is to identify key entries and stop exit points. We call them stop loss points. And don't forget profit target zones. Now, if a market breaks out of a channel, all right, how do you find a profit target zone? Anybody out there, okay? Anybody? William, absolutely. Momentum is not a factor of volume. Momentum is a factor of how fast, price is moving over time. Okay, and that's more important than volume, in our words, because you can have a market moving up on light volume. It just means there's no sellers. Okay, so the price is moving fast over time. All right, so here's some things coming in. All right, Fibonacci, yes, we can use those. And if you're into Elliott Wave, you can certainly look at using fib extensions and retracements for the different wave counts. Support and resistance, pivot points, sure. Okay. All right, and Ashwin doesn't see the slides. Okay, so I don't know. Don, I'll let you jump in and help him with that one. Supply and demand, okay, and trend lines. All these things, and we're all a little different in how we like to analyze the market. The thing is, you want to be objective and consistent. That's the key. But you want to take into key entries, where you're going to put your stop, and also target zones, because you need to know where this thing is going in order to figure out your risk to reward, right? All right, so what we do here is the goal is obviously to determine the best time to enter and exit the market. We also use multiple time frame analysis. All right, multiple time frame analysis means, and you'll see, I'll have some charts here in a minute, I'll show you. You'll see we look at the 60, the daily, and the weekly. And so when you look at different time frames of the exact same market, we're looking to see, and it helps us to plan the timing of the trade. And if you've attended any of my Wednesday TradeStation morning briefs, I do that all the time. So you can see that in action. All right, so that's one way we do it, okay? So we want to apply a high probability matrix of technical analysis and look for key convergences indicating bullish and bearish trades, which is basically what I just said. Uncover the trading patterns used in key breakouts, Fibonacci price levels, can be used, 1, 2, 3 breakout price patterns, and more. We take all the different forms of technical analysis into consideration. All right, identify key exit price levels and profit target zones using all the approaches that you all have mentioned already. So that's action 2. Action 1, watch list. Action 2, entry. Okay, so that's kind of where we're going with that. All right, now, towards the end of the presentation, I'm going to go over and use my live TradeStation platform. So type in some stocks or ETFs. Let's keep it simple, stocks and ETFs, on markets you want me to look at and the time frame. And also well, stick with daily to make it easy, and type them in caps. Okay, so we'll take a look at that. All right. All right, Ashwin, the recording should be available probably in a day or so. Okay. All right, so let's keep going on here. All right, again, what did I tell you? Your goal each week is to make money. All right, and we look at different patterns that can make us money. Again, we're analyzing breakouts from consolidations. We're looking at fractals in the market, which are formations of pivot points that form different patterns in the marketplace. We're looking at reversal days. We're looking at all Elliott Wave. We're big believers in Elliott Wave, so we're looking at Elliott Wave a lot in fib price levels. This is how we do it. Let me go to the next slide. All right, and so here's an example of a market where we actually, and I'm just going to grab a pen here, and let's see how this works here. All right, so here's the area where it was consolidated, not moving, very dull part of the market. Yet this type of back and forth channeling created a bracketed market. So we put that on our watch list. Then when it started to break to the upside, all right, our trading approach called the ART system, as well as our tools down here, started indicating and confirming a bullish pattern. So this is an excellent time for a trade recommendation to the long side. All right, and up we go. And then we adjust our stops under these pyramids and so forth. But the point is again, we would have missed this trade if we didn't have this on a watch list. So that's why that action step number 1 is so very important in making sure that you don't miss the breakout. You do not want to get in up here. All right, trade's done by then. That's the riskiest part of the place to get into the trade, and we're already seeing bearish divergence and momentum at that point. So you don't want to get in when it's too seasoned or mature. You want to get in during the breakout. So if you take anything away from today, it is very powerful scans can be done on these bracketed markets. They're also called fry pan handles, okay, for those of you that like those types of names, okay? So that's another name for them. All right, let's keep going on here. All right, just another proof in the pudding here that markets that channel can develop nice breakouts. You do not want to be in the market when it's channeling, because that's basically money you have tied up, not moving. Again, remember, you're not an investor. You're a momentum trader. Traders are momentum people. We want to be there when the price is moving, not when it's not moving. So don't waste your time getting into that type of market. All right, we see them all over the place. So anytime you have a channel, these should be on your watch list. And when you make a watch list, all right, it doesn't matter. You know, I'm being asked by Rick, can this be used in the S&P 500 E-mini? Yes. I mean, don't you see channels, Rick, on the S&P E-mini? Don't you see channels in Forex? Don't you see channels in all futures markets and all stocks? Of course you do. So why would you think you couldn't use channels for different markets? And the answer is, of course, you can. All right. So these kind of strategies here can be used for watch lists on a variety of different markets and a variety of different time frames. Again, I'll ask the same question. He's asking, it can be used on a 1 minute or a 15-second. Do you see channels in a 1 minute? Do you see channels in a 15-second time frame? They'll be short, but you'll see them. Do you see them on a daily chart? Do you see them on a weekly chart? Of course you do. Okay, that's the symmetry in the marketplace, the fractal symmetry in the marketplace, where basically when I remove the X and Y axis on a chart like the one you're looking at here, this happens to be a daily, but you would have no idea if you were looking at a 10-minute chart, a daily, or a weekly. Okay, because price patterns are fairly similar on different time frames, provided the liquidity is good. Okay, good question though. All right. All right, so we'll get there eventually. We'll get there. Don't worry. We'll look at the S&P in just a minute. All right, so let's keep going here. Now, Elliott Wave. How many people out there like the Elliott Wave or use it? How many people out there like the Elliott Wave or use it? Going once, going twice. A lot of people that don't use it have a problem with the fact of counting the waves. There's both the classical and the modern approach. We combine them both, and it leads itself to a much higher probability of wave count. So as a general overview, just in case you don't know what it is, there are 5 waves, okay, in an Elliott wave trend. Wave 1, 2, 3, 4, 5. Waves 2 and 4 are corrections. 1, 3, and 5 all move in the direction of the trend and are called impulsive waves. And then wave 5 is the end of the trend. And after wave 5, then it usually goes into some form of major correction or a complete change in trend. Okay. Now, one of the complaints is that it's a bit subjective. All right. And again, I've been doing this now for over 20 years, and we've been using the Elliott Wave for over 20 years. And when you know what you're doing, it's not subjective. Okay. You can actually use it quite well. It really is the roadmap of the markets. However, there's times when you look at charts when it is going sideways and are messy, and that's what throws people off. But that messiness is a correction on a higher time frame. And when you see that on a lower time frame or the time frame you're looking at, don't try to trade it. Move on. Move on and make sure you can see a clear Elliott wave count. Don't force the trade. That's where people get themselves in trouble. All right, so let's keep going here. All right, here's what it looks like in a downtrend. Again, 5 waves to the downside. And we'll keep going here. Fancy change there. And here's Apple stock. I mean, this was a home run using the Elliott wave here. Notice there are waves inside waves. And my purpose here is not to educate you really on Elliott wave, but once you understand how to use it, it is a tremendous tool that we use in order to find stocks and catch the momentum in the impulsive waves. Okay, and we cover this in my book, Elliott Wave Technique Simplified. If that's something that you are interested in, you can get that again at Amazon or the major bookstores. It was published by McGraw-Hill. Okay, so our next one is the Elliott Wave, where we look for using fib extensions. Remember, you guys mentioned fib extensions. Here's an Elliott Wave 5 to the downside. Okay, here's an Elliott Wave 5 to the downside. And we use fib extensions to get that Elliott Wave 5 target zones. All right. Now, a lot of people are having trouble with the slides here, Don. I think some people are saying, are the slides advancing? Are they not advancing? They look like they're fine to me, but I just want to make sure everybody is A-okay out there. All right, so I'm just going to keep going on here. Maybe there's a little delay, okay? There might be a little bit of a delay, okay? Looks like, okay, good. All right, so let's go to the next slide here. All right, now using Fibonacci to calculate price target zones. Why are price target zones important? Okay, why is price target zones important? I'm going to slow down a little bit so we don't have a problem with the slides being a little delayed, okay? So why is Fibonacci important to calculate price target zones? And more important, why are price target zones important? Right, calculate your risk and reward, right? Because, if you're going to a trade and your potential profit is $2, all right, but your risk is $4, that doesn't make sense to take the trade, okay? So you want to have a positive expectancy on the risk to reward. And we have, if you don't know how to do that, again, come to our website because we have a lot of materials on risk control. And really, when you get right down to it, risk control really separates the novice trader from the professional trader because we're just not always right. Even the best traders are right about 60–65% of the time. Some will claim they're right 80%. Well, okay, but they may only trade 3 times a year. They wait for that ultimate pattern and trade 3 times a year. But if you're an active trader, trading much more often, you're probably going to be right about 60% of the time, but you can make a ton of money, all right, if your win to loss ratio is 2 to 1 on that, okay? And even 3 to 1 is even better, okay? So whatever works for you based on your ratios, that's what you want to stick with. All right, let's go to our next slide here. All right, and Fibonacci can be found everywhere in nature, okay? Here it is, and it's the same thing with Elliott Wave as well. Here it is with a situation of a cloud. Now, some people are saying they use a 5 to 1 ratio. That's fine. It just means you're going to trade less often than somebody using a 2 to 1. All right, so that's kind of what that means. All right, and here it is again, and this is to wake up all the guys out there. All right, here's Fibonacci in action again. All right. All right, so now we'll move on now that I got everybody awake. And we'll go to our next slide, a Ford Motor Company. Now this was a while ago, okay? So this is not something that is a fad, okay? The Elliott Wave and using fib extensions, once you learn how to use them well, is something that wasn't developed in the last 6 months. It's been in use for a long time. And the reason why is it works. All right, but you have to understand how to use it. We have a variety of tools in which to do. So this is how we create our target zones for our stock picks that we do. We look at 3, 4, and use Fibonacci extensions on all different types of markets. All right. So okay, so let's take a moment here and switch and go to screen sharing here. Okay, I'm going to pop up. I'm going to turn my head a little bit so you'll see me move here. All right, so let me just get all hooked up and give me 1 second to get my pointer reactivated here because it really helps if I use a pointer. All right, so I'm going to put that over here. Yes, and then I'll come right up here. And all right, so this is a 2-minute time frame on the S&P E-mini, and this is the 10-minute time frame. And so this movement to the upside on the 10-minute is seen more vividly with this movement here on the 2-minute. So if you were trading the 2-minute, all right, this would be a trade you could take to the long side, all right, because you're starting to see some bullishness here. But it's not a trade you're going to be in that long. So you need to understand that if you're not going to be in this trade that long, how long are you going to be in it? Well, this is where multiple time frame analysis can help because we can go to the 10-minute time frame, all right, grab a fib retracement, bring it from here to here, all right, and we're already in the target zone for a wave 4. And because of the tools that we use, like the pink dot here telling us this is a wave 3, 4, we're already in the target zone. We could climb up and go a little higher, and it looks like we are because this is green over here. But it's not going to be an investment that you're going to hold for the rest of the day, at this point. The market's closed now, but in any case, we should start to see some selling eventually because of this indicator being red, also correlating that it's going to go back down on that 5th Elliott wave down. But you certainly could have taken a long trade on the 2-minute, and if you took a long trade or short trade on the 10-minute, you would have been stopped out by now. But all this kind of things that we talked about, Elliott Wave, Fibonacci, and looking for breakouts and so forth are all apparent on any time frame and any market. If we go to scans, let's go over to a 60-minute scan here for just a minute. Here is one. Here's radar screen set up over here. Okay, and what we've done is we've created different scanners that you can actually purchase at traderscoach.com called the Trade Confirmer, the Elliott Wave Scanner, and the Turbo Scanner. And so we use those each and every week when we look to set up our watch list. And in the Turbo Scanner, it's going to tell us bracketed markets and so forth. So we look for those. Now, one we found here entering into an Elliott Wave 5 with ROST on the 60-minute chart. So on a 60-minute chart, you're going to be in a trade anywhere from a couple days to probably 2 weeks. Okay, but here's the target zone based on Fibonacci extensions between 73.25 to 63. So again, if I were to write on this, this would be like a 3 here, 4 here, going down into a 5 target there. So then you'd have to calculate your risk to reward if you just showed up on the chart now and not earlier when we did. Okay, is the trade still worth it? And for that, you'd have to calculate your risk to reward. All right, but it is definitely heading back down because the probabilities are in the favor for more downward pressure using our indicators. Again, I'm not going to go over exactly how all our tools work, but we use them in such a way that we connect the dots to get a big picture of what's going on. And notice we have bullish divergence here, which you always have between Elliott Wave 3 and 5. Okay, so the entry here, based off our tools here, would have been, let me just erase this, off this little P pyramid here. Okay, right there. Let me open that up so you can see that a little bit better. Okay, so when that momentum indicator, which we call the owl, goes negative and we get a P pyramid, that's a great time for a short trade. Okay, and we're heading down to the target zone here. All right, so that's kind of how we scan and look for possibilities, but the radar screen is the way in which we build our watch list. Sometimes we find stocks and they're just not ready to go into yet, but they are good ones to watch, and those we create a separate watch list, and you can do that using a regular table in TradeStation, create your own watch list. And then also looking at stocks, okay, we use 3 different screens, a 60, a daily, and a weekly, looking at different types of movements in the markets. So let me just scroll back up because I think we had some stocks to look. I'll just keep it simple and do a couple stocks here. Let's take a look at RH. And this one I think was for somebody earlier today. So I'm just going to put that in, and this is the same market on 3 different time frames. So we got the 60 on the left, the daily in the center, and the weekly on the far right. And based off our tools here, this is kind of an interesting tool. This tool here, the PTF, pretty simple to use. When it's green, there's a high probability that whatever the highest price is, which would have been here in that green area, there's a high probability we're going higher. That's all that means. When it's yellow, it's neutral. It's giving us no reading. When it's red, it means it's going down lower, because it was red here and went lower here, but the momentum was not strong enough to keep it red, so it turned it yellow or neutral, which indicated at that point there was no guarantees of any further lows. But in here, if we look at the 60-minute, we had a nice entry off the pyramid here, all right? And you certainly could have taken it. We had a bullish owl. We did not have a red PTF. We had a green trend line in place. So at this particular point, no reason not to take that trade. And at this time, there's no reason to get your stop too close if you're trading the 60-minute time frame because you have a green PTF. So the probabilities are it's going to go higher. Even though it may pull back a little bit, the trend's not over. That's what that is telling us. So you don't want to have your stops too close. So the system keeps the stop down here. Then when we break out and make a new high, the stop will be moved up under this yellow forming, but not confirmed yet, what we call pyramid trading point, which is what isolates support and resistance in the market and looks at 1, 2, 3 pattern type things. All right, so that is a trade that you could have taken earlier this month. You would have still been in it right now, 7 days later. So it's a short, quick trade. Okay, it's expensive stock though, but it is a short one. You can also use options. All right, just make sure they're in the money as much as possible on the shorter time frames. Okay, so your intrinsic value is highest. All right, so daily charts indicating we're almost going green here, but certainly breaking out of this sideways channel as well. And we have a green PTF over here on the weekly, so there's a high probability on that time frame that we're going higher as well. So when you use 3 time frames like this, it helps you to decide, okay, with confidence, what's going on short-term, intermediate, and long-term, so you can do your timing a little better. Okay, so let's look at another one real quick here, and then we'll go back to the PowerPoint presentation. All right, here's EEM, which is an iShares market. Okay, so on this one here, right away I see a red PTF on the 60-minute, all right, a yellow and a green on the weekly. So longer term, we're going higher, All right, but we're in a correction now, and the 60 minutes telling us this is not a good time to buy this market because it's going to go lower short term. All right, so wait until the correction's over before going long. Okay, so that's kind of how that works. Let's go to the QQQ and give this a second to load. All right, so the QQQ, red PTF, red owl, okay, on the 60. So it's going to go lower than this point before it goes above here. So it should back around and come back down here. So you wouldn't want to go for a long trade right here. And notice that we're in a correction here at this point. And so we'll see during the next downtrend here, when it goes back down, how much stronger that is and if it can turn any of the PTFs on the daily or the weekly red. But so far it hasn't done that. So we're going to see some short-term selling probably for a little bit early in the week next week. Okay? So we could go on, but I just want you to get in the habit of this is how when we take a look at stocks to trade, how one time frame may look good, but the shorter time frame may say, put the brakes on, don't go quite yet, wait until the short-term time frame is also favorable, and then look again at the higher time frames, and if they're still favorable, that's when you pull the trigger, okay? So it helps you with timing. That's the key. All right, let's go back to slides here, because I just want to finish up some other points here that are kind of important. We have a report that we've been doing for years, and it's really good, and it's called the Weekly More Opportunity Report. And the More does basically what we do in this is all the scanning for you. So we do all the scanning that basically I've gone over here for you. So you don't have to buy any of the software because we can do it for you. But we also, in the More service, give you a full report from a terms of what the long-term and short-term is on the overall market. So we look at the Dow Jones. That way, when you get to a top in the Dow, you don't miss it. You don't get burned, okay? That's really important. So we also have a bunch of trading, we call them trading opportunities or recommendations that we give each and every week. And we have a written report. I do a video every Sunday, basically a very similar format that I'm doing now where I go over the trade picks and go over the markets. All right, and then each week also on Wednesday at 9:30 a.m. Pacific time, I do a client support webinar, which is included, where I'm with you for an hour. And you can ask me questions on markets and setups and so forth. What I want to do is just quickly show you what the written report looks like. So I'm going to go back to screen sharing a moment. And this is the cover sheet of the report, but this was one back in September, okay? So we give you the current market analysis. We take a look at the stats, fear and greed, global situation, give you a write-up on the market itself and what the Fed's going to be doing. We take a look at the weekly calendar, and then I give you an overall view of the market. All right, and I do this, you can download the longer-term trade charts as well on this. And then I also cover this in the video that I do as well. Here's the 60-minute. Then we take a look at the weekly and the monthly. We look at upgrades, downgrades, cover initiated. And then we have the weekly stock and ETF opportunities. And then we have trades you can take this week, short term, intermediate, and long term, and then holding positions. These are trades where the shorter term charts may have turned bearish, so we want to put a hold on that before recommending them again. Or perhaps they reach their target zones. And then if you want to learn more about our services, we have that. So that report is done each and every week for you on Sunday before the market opens. So you can be prepared for what we think is going to happen on the Dow, as well as go over what trading opportunities we recommend for you to take that following week. All right, so that's called the More report. Now, also, too, I'm going to put up a link in just a little bit where you can get the More report if this interests you. But I want to show you some recent trades we did on the More. And our first one here is loading, so give this a second. All right, this was Coca-Cola's 60-minute time frame. We had a nice breakout. It was a trade that lasted, basically a couple weeks. but we took advantage of this nice long movement to the upside here. Let me grab a pen here. This movement here, and it was one in which you're not going to be in this for a long term. This is a short-term trade because it's a 60-minute chart, but it was a couple weeks, and it's a nice little profit there very quickly. If we go to the next chart here, again, I want to make sure you have time for that to load on your side. All right, here's one where we identified an Elliott Wave 3, 4, and got everybody in on Wave 5 to the target zone. It just reached the target zone there. Okay, so that was a nice one. And this was a daily chart. So this was a position trade. This was, people that use the daily charts are more familiar with daily charts because those are ones usually used for normal position trading, so to speak, where you're going to be in trades anywhere from 2 weeks up to 6 months. So this was one that was a nice little, boost from Wave 4 to Wave 5. But again, you don't want to get caught in here trying to go long. Instead, you want to take advantage of going with, the momentum. That's the key. Sometimes we trade from 3 to 4 because we can get in at the top of a big Wave 3. So the Wave 4 correction is huge, and we can make good money on that in a fairly quick period of time. So we do that, okay? So all the recommendations are labeled, and I go over everything with you each and every week. And then finally, let's see, the next one here in 2018 was again a 3. You can see the 3 here. Okay, this was a long-term chart. This was using a weekly chart. And this one we've been in for a year, okay? But, we got in here. We're up over 100% return, and it's still going up. So the key with that is, and the return on investment, even if you have to hold these longer-term ones for a year or two, are huge. All right, so that's what matters. But some people want to ring the cash register, so to speak, more often and don't have the time to tie up money for a year or two. That's why we give you trades on the 60-minute chart for short term or the intermediate, so your money is not tied up. But if you have a ton of money and you want to tie some of it up for longer term trades, then we have these available for you. So I guess kind of a little bit of something for everybody, so to speak. All right, let's go to our next slide. And here's some more that we had a while back. Okay, we've been doing this for a while. This is kind of the reason why I want to show you this one is this was an Elliott Wave 3. So it was actually a downtrend, and then the correction came, okay, and then of course back down it goes. But this was the target zone that we were shooting for, and we hit it, okay? So again, we were in this for a number of months because this was a daily chart, but a nice return, all right? Huge return. Sometimes, usually when we shoot for the Wave 4s, we try to make them at least 50 to 100% return. All right, let's go to the next one. Give that a second to load on your end there. Here's another 3 to 4, okay? And this was one September, October, November, December.
Bennett McDowell.
Still, we're still in it at that point.
Bennett,
okay?
Bennett.
So, but notice how the
Can you hear me?
ETF was green during the move to the upside, and as the trend got mature, at this point here, this was an A, B wave, if you're into Elliott Wave, and C wave. So we were looking at the situation in C wave where the momentum was starting to slow down
Bennett.
as we got closer to the target range. That's pretty typical. All right, and the next one, okay, well that's it then. All right, so let me put a link up here. If you're interested in our report, I'm going to put that link up there. Let me go back and see here. All right, some people, hopefully you can see the charts. Don, I don't know why you can't see the charts there. I've got my volume turned off.
Oh.
At that time when you were
Can you hear me now?
Talk to me a few.
Bennett, so, can you hear me?
Let me know what's going on. I just didn't want to have any feedback. That's why I had that off. All right, so no charts could be seen at all. That's kind of interesting. Don, you there?
I am here, Ben.
Okay.
All right.
So what happened with the charts?
All right. Well, I advanced. You were on this slide for quite a while. Hang on. All right. You drew on.
Okay.
All right. So that's the right. That's the right drawing on this one. Hang on. These didn't advance at all. Why don't you run through this one more time?
How come?
I can't.
Okay.
I don't know.
All right.
You
No,
came
it's
back.
easy.
Yeah. Does
Okay.
that sound
So
right,
here's
folks?
3.
Okay. Go.
4, and 5. You know, the problem is that when I was looking at stocks for everybody, I had my chat scrolled up earlier for when people were typing in, so I didn't see the latest text down here that the charts weren't displaying. Okay, can you see that now? Okay, good. All right, so before I go to the next one, I'll just make sure everybody can see that. So this is Elliott Wave 3, 4, 5. And what we do here is we look for these patterns and then try to get you in at the beginning of the trend. Okay? We do not want to get you in way up here because the risk to reward is so bad at that point. So we want to get you in early, okay, in the trend. And so notice we had a green PTF down here. And so this was an ideal time to take this pyramid to go long here. All right, so this is one that we have in the Moore report, and it was based off a daily chart. So you're going to be in this trade from anywhere from 2 weeks to 6 months. All right, and good trade. And this is one we're out of at this point. But it's a great example of how we try to time and get you in, okay, at the right time so the risk to reward is high. All right, so now I'm going to go to another chart. So let's click over here and see how that works. Okay, I'm not going to write on it or do anything until somebody says they can see the chart. So let me know you can see the chart. This is a 6 months to 2 year long-term trade chart. And you see it. Going once. Debbie, thank you. Okay. All right. So now this one was another chart from 3 to 4 to 5. And this is a weekly chart. So some people can see it and some can't. That's interesting. All right. This is not EC. This is another chart. So can you see this chart? I'm going to label this chart number 1 with my marker. No. Yes. No. Can you see the number 1? Interesting. Some people see it and some don't. All right, this is a long-term trade. Interesting.
All right, folks.
Charts
This
just aren't
is
fancy ones.
AA.
What to do about that?
Bennett. This is
my end here, everything looks hunky dory. Everything looks fine.
Bennett. What we have on the screen right now. Are you on your? You might be sharing this screen. Are you doing that?
So it should be pretty easy. So, okay. So now I think you just took control there. Let's see.
Okay. Yeah. This is the long-term trade.
Okay. Don. Okay. You can talk. I can
All right.
listen
So what I see on the screen right here is that AAPW or
yes.
okay, and this is
Yes,
your
that's
long-term
good.
trade, 6 months to 2 years for 2018, and I do see the 5 levels. So far
Good.
we should be good.
Okay, good. Then stay with me, Don, okay?
I will.
So when I go to the next chart, I'll ask.
I speak
okay?
McDowell.
Yeah, I'll keep my volume on. All right, so the point I wanted to make about the long-term trades is you're going to be in this for a long time. This is a trade that's going on over a year. And for some people, this may be fine. But for other people, they may have a smaller account and not want to have their money tied up this long. So a trade like this may not be the best one for you. Instead, what would be better for you would be the trades that I showed earlier that hopefully you saw that are based on the daily chart and the 60-minute chart, because you're going to ring the cash register quicker. They're more intermediate. So this is a long term. But let me tell you, Just because this is a long-term chart doesn't mean the return is bad, even though you have to wait a year or two for it, because it's all about the ROI, return on investment. So if I'm making 100%, I don't recommend these trades unless the percentages are really high. So if you have to be in a trade for years, but you make 100%, well, then you're making 50% a year. That ain't so bad. But the problem for some people is that you're not going to see that money for 2 years. So a trade like this may not be suitable for everybody. Now, if you have a lot of money, you may want to put a little bit in a long-term trade and some in the shorter-term trades, okay? So I just want to make that clear so you understand it. But that's why we make recommendations on a variety of different time frames to try to create trades that are suitable for different types of investor and not investors, but momentum traders, okay? All right, cool. All right, now I'm going to go to the next one and let that go over. And then Don, you tell me when you can see this one. This one is titled 100% plus gain, or 100+% gain. So let me know when you can see that. In the meantime, okay, I assume that you can hear me okay. I'm getting a question.
You're in now. I've got the right slide up now.
Question. Okay, cool. So we're okay. So I'll start on this in just a minute, but let me just answer this question because this is being asked, what would you consider an investor? I get asked that a lot. An investor is somebody that is really putting their money into the market. And as an investor, you probably put it in there for at least 7 to 10 years because you're not really trading the market. You're really more investing in the outcome that you desire in 7 or 10 years based on the normal rates of return, regardless of the economic cycle. So as an investor, time is your friend. All right, the more time you have in the market, the higher probability, provided you're well diversified, that you're not going to go bankrupt. All right, if you put your money in and all of a sudden have a liquidity problem and have to pull it out in 2 years, well, you may take a loss because you're pulling it out maybe when the market's in a major correction, okay? So being an investor is a lot different than being a trader, okay? So that was kind of a general explanation, but I think pretty good overall. All right, this chart. This chart is a day chart. So this is a daily chart. This is an intermediate trade, okay? So on this one here, what we're doing on this particular chart is we're actually trading, okay, the correction or market. So the market's coming up here, and then we think based off the Elliott Wave, it'll go back down here. This was one taken a while back, and that's exactly what it did. So in a case like this, what we're trying to do is get in as early as we can when we see a bottom, use Fibonacci retracements for our target zone, and go for the Elliott Wave 3 to 4, and get in early as possible so our stop can be as low as possible, because you don't want to move your stop up. The reason why people don't make it to the target zones is a lot of times fear comes into their trading and they move their stops up too close. So you want to keep your stop as far away as possible, and if you get in early in the trend, it allows you to put it right under the bottom and keep it there. We have a whole way of doing this, but keep it there until you get above the first red line of the fib retracement area, which is 38.2. All right, right around in there. Okay, so that's kind of the way we do it. So this is an Elliott Wave 3 to 4 trade with 100% return. If your return's only going to be 10%, it's not worth taking the trade. All right, so that's it. All right. Now, what I'm going to do is go to the next one, and I will solicit Don once again to let me know when that trades. This is CLVS stock. This is a day example as well, back a couple years ago. And the point I'm trying to make with this is that these patterns we see in stocks from years to current years. I showed you 2000 setups. Now I'm showing you ones from a few years back. All right, so let's see here. All right, I'm getting a lot of little comments about how to, we got a red X in the upper right corner, the log out, log back in. Okay, interesting. All right. Don, should I turn off screen sharing? You think maybe that could be interfering with anything?
Well, yeah, you're not sharing your screen anymore. You're on the slides.
Right.
So,
Let's turn that off. Um, okay, so let's do that.
all right.
All
So
right, so now, what do you see?
you've got CLVS. It's a day chart.
Good. We're good.
Yeah.
We're good. Okay, so this is another Elliott Wave 3 to 4, 100% return. And it took 1, 2, 3, 4, 5 months. So you had your money tied up for 5 months on this. Okay, and that's typical of a intermediate term position trade when it's successful. If it's not successful, you're going to be stopped out much quicker. But when the trade is going your direction and you don't move your stop up too quickly, all right, then that's a good way of doing it. Now, one of the things here is look at the green PTF here. This is a big confidence booster. When we see this, this really says to us, okay, we're going to make more highs. So if you have a little bit of a fearful mindset, when we see this type of thing, and this is what we're doing with the more service, we're placing our stop based on what the tools are telling us. And in a case like this, when you have a green PTF, we don't need to have the stop so close because we know we have a high probability that we're going higher. And so we always want to play the probabilities. Now, if it was yellow, then we may start to move our stop a little bit closer when we get into the red line territory. But as a standard rule, we don't like even to move our stop at all until we get up to that red area. Okay? That way we ensure that we don't get wiggled out on corrective volatility. Okay? All right, I'm going to go to the next one now. All right, and now here is where we have our special offer. Okay, so here I will paste the link in here for this. And Don, let me know if you can see.
I do see
more
the
report.
I do
right,
see that the coupon, right?
Oh, okay, that was not me. I don't know what that was, but that was I think maybe TradeStation is telling you something. But in any case, this is our service, and what I've tried to explain here in the webinar is that we use a lot of tools to give you the best possible information. And we use, not only do we use these tools on the actual market, but we use these tools when we look at individual setups that we recommend as well. And so we put a lot of work into it, and we get this information to you each and every Sunday so you're ready to go by the time the market opens. So you get a written report and you get a video. And the idea is I explain basically I go over things just like I did on those charts, tell you where to get in, where our stop is, and so forth. So that is the service. So if something like this interests you, now's the time because it's a really good price, but it is a great service and we have a ton of people subscribing. And that's why I wanted to talk to everybody about it on TradeStation because I don't get a chance to do that when I do the Wednesday brief, okay? All right, so now let me just see if there are any more slides on this. Oh, okay, all right, so basically this is just a little bit more information on it. All right, you get the ongoing weekly live trading sessions. I do, again, let me just explain a little bit more of this. I got a couple minutes and I'll be done. But on the More service, not only do you get the video on Sunday, but midweek on Wednesday, you can come to the client support session. And if you want me to look up any of the stocks that you're in, we can do that as well and give you an update. Okay, so that's a possibility. All right, so that's available. And now we're at the end. Okay, so now I can say thank you for attending. All right, so great. Okay, I know we had a little bit of technical issues there, but we made it through. As traders, that's what we do. We don't quit, right? We stick it out, and we did it. And again, it was my pleasure, and I want to thank Don, you for being here. You do a tremendous job. You've always helped me a great deal, not only here today, but on Wednesday, each and every Wednesday for the morning briefs. So I really appreciate our relationship and working with you. So, and everybody at TradeStation too. Anyway,
likewise to you, Ben. I just want to point out to everybody here that if you had issues with with seeing the slides in a timely fashion, we have recorded this, and I'll go through it. We'll work out any of the rough spots. The presentation was extremely insightful, and you'll be able to get the full benefit of it after we post it to our YouTube page, the TradeStation University. And if you're a TradeStation customer, you'll be able to see it in TradeStation today, tomorrow. And certainly traderscoach.com is a great place to go to get some of your questions answered. So you've got all kinds of resources coming out of this webinar.
Well, thank you, Don. I think you might be a little busy on the editing end of this, which is why I was chuckling before. But let me just answer one other quick question. Peter's asking, can you make money in short-term trading 2 to 10 days? You can, but your amount of money you're going to make in 2 to 10 days is not going to be as great as the amount of money you're probably going to make doing a longer-term trade, because you're taking profits more quickly. Now, of course, your account size. All right, I don't know what kind of account size, but if you have a large account size, well, you can make a substantial amount of money in 2 to 10 days. So it's up to you. But we use the 60-minute charts for that. Okay, those are our short-term trades. But that's a good question. All right, I think I'm done now. I think I've got pretty much everybody's question. So I appreciate everybody from being here, and thank you, and thank you for hanging in there during the technical issues. And I think we're good to go. All right, so Don, thanks so much.